Just wanted to show you an actual trade just taken place and just to explain the setup. So we've got sterling dollar daily here. That's the chart. How do we get that? Well, we would just drag this window across onto this. So we just click and drag it across, and that's how you'd move it across. And to place an order, you just double click that. And you'd put in what value. I'll work out how you work out the value. Because it was a short, i.e. a down arrow, you see the down arrow, we know we'd be selling, and then we'd be looking to buy back cheaper later. That's what happened up there. We also can do it this way by pressing the new order key. So what happened here? Well, the price fell below the green line, and as it did, we got the movement happen. We added to the short around here. We do that based upon the price moving fast, moving lower, and so on. I could have and should have maybe put it in higher as it started falling through. Doesn't matter. It's just an example. And then we got out of it all the way here. So we entered all the way back then, and just recently on the 11th of March we had that exit. So and these are the time frames D1. Now if I move across different time frames, I'd see different charts and different indicators for each one of those time frames. How do we decide, first of all, what our stop loss would be? Well, we tend to look at the range that each one of these bars moves. Now in this case, I'd probably say on average it's tended to move, I'd probably say about 3 of these bars on any given period, 3 of these squares, 1, 2, 3. And then I say, well, double that has to be the stop loss, because 2 times, so the initial stop loss at entry is going to have to be 1, 2, 3, 4, 5, 6, somewhere up here. And then you work what that is, and you work out that it's that number, take away the number up here, and that should equal 2% of your risk capital. If your risk capital, for argument's sake, is £20,000, then that stop loss has to be £4,000 were it £400 if it were to be hit, because 2% of 20,000 is 400. So if it went all the way from there all the way up there, now of course in this case it didn't, then that's the first thing. How many contracts do we add? And we might say, okay, let's say mathematically that came to 2 contracts, because each contract is £10 a point. Then we know that where we are with that stop loss. But also, in adding positions, how do we decide? Well, very often what I'll do is I'll look to see how quickly these prices are falling. I'll look to see, is the MACD, that's MACD in this period, falling in the direction of this arrow? Is the MACD in the next time frame also falling in the direction of this arrow? Of course, this is a historic chart, so these aren't what they were when we entered the trade back here. And is the stochastic all moving? If they're all moving in the same direction as the price, then I might want to add those positions, and get out those as soon as it makes a 1 period high as well.